good morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, we're now into the second calendar quarter of 2022, and the first quarter rather was pretty rough for equity investors, to say the least. Let's take a look at how different markets, both locally, regionally, and internationally, would have fared, and what investors might expect in the coming months ahead. Well, it's no secret, no surprise, no secret rather, that local markets will on the downside for that first quarter of 2022. Here we can see that it's been pretty much one consistent direction over the course of that first quarter, with the Trinidad and Tobago Composite Index in that blue, with that blue line down just around 2.8%. The All TNT Index, or those domestic companies listed on the Trinidad and Tobago Stock Exchange, just basically tread water, up 0.1% overall. But there was that very significant deterioration in cross-listed company performance, stock price-wise, with some of those Jamaican and Barbadian cross-listed companies down just around 10.3% on average. When we take a look at some of the major movers on that Trinidad and Tobago Composite Index, we would notice some pretty divergent performance. Agostini Limited was up just around 42% over that first quarter, certainly very positive investor sentiment based on, increasing performance, one, but also that acquisition activity that would have taken place and is expected to do wonders for the company going forward, both in that pharmaceutical segment as well as the oil services component. Also for Agostini, Scotiabank was up just around 17.1%, continuing to pay very healthy dividends to investors with increases in revenue and earnings, also in their most recent earnings result. Massey still riding high on their stock split and cross-listing initiatives, up just around 11%. Angostura Holdings up 12.3%, and Flip Deco up just around 11.1%. When we take a look at the underperformers, it tells a bit of a different story. Wholly owned subsidiary of, or majority owned subsidiary of NCBFG Guardian Holdings Limited, despite reasonably good performance in terms of their earnings, were down just around 8.7%. National Enterprises Limited, or NEL, down 10.4%, which is somewhat of a surprise given the more robust recovery in energy prices and the fact that NEL is very heavily weighted and dependent on the performance of energy markets overall. First Citizens Group, or First, down just around 15%. Certainly there would have been a lot of positive optimism over the potential acquisition of Scotia's Guyana operations. We're still waiting to see whether or not that will be approved. Whitco down 15.8%. Another surprising stock move, given its very, very healthy dividend payments to investors. And NCBFG down a whopping 20% on fairly lackluster performance and earnings results overall. Now, when we take a look at the international markets, U.S. sectors were broadly lower, despite being down as much as 12% in the first quarter. Markets did recover a bit. The S&P 500 closing the quarter just under 5% decline for that Q1 period. There was broad-based weakness across most of the sectors: financials, industrials, real estate, and communication services, all down. The one outperformer was energy, and again, with the energy market disruption and shocks rather, the energy sector was up just under 38%. So certainly those who would have held strong and held the faith in terms of holding on to energy stocks would have been richly rewarded in that first quarter. When we take a look at regional market performance, it was pretty much the same across most regions. The US, as mentioned, down 4.9% in that first quarter. Europe down 5.4%, certainly rattled by that Ukraine-Russia war and standoff and the ramifications of sanctions, energy concerns, energy security concerns. Asia down 6.1%. China taking a bit of a beating in that first quarter with regulatory concerns and their closeness to Russia as a trading partner being on the front burner for investors. The one bright spot relatively for international equity investors was Latin America, which after 2 years of languishing did post a very phenomenal first quarter of 2022. Latin American ETF, a very popular one, up just around 26%, certainly buoyed by robust commodity markets, with Latin American countries and companies being generally benefiting from export-led earnings. So what can investors expect for the coming quarters or the rest of the year? Well, many of these themes are expected to continue at the local level. Companies that are continuing to diversify geographically and engage in acquisition activity are expected to do reasonably well. On the downside, inflationary pressures, which are mounting, could provide some headwind, some significant headwind to economic recovery despite the rollbacks of COVID-19 related measures. And there is cautious optimism towards an energy production recovery story in Trinidad and Tobago over the course of 2022. In the case of international equity market drivers, we can see that geopolitical tensions will continue to play some significant role for the time being in terms of investor sentiment and market direction, as well as at the domestic level. Internationally, inflationary pressures will weigh on the consumer and discretionary spending power, and of course that could also impact or should also impact markets, and that is going to be compounded by continued supply chain constraints, as well as fairly significant disruptions to traditional commodity markets from that Ukraine-Russia war/standoff. And elevated valuations are something that international investors will have to contend with, but there is some moderation in valuations, which should make it a little bit more attractive in the current environment for investors to weed out and take a bit more or average down rather in terms of the equity positions. Well, that's it for this week edition of the Bourse Report. For more information, you can give us a call at 226-8773. Email us at invest@boursefinancial.com, and of course, check out our website where all of our research is absolutely free at bourseinvestment.com. Have yourselves a wonderful investing week. Stay safe, get vaccinated, and see you next time on the Bourse Report.